Cash still serves its purpose in society, but credit is mandatory, especially in today's digital age. Personal credit plays a crucial role in many aspects of our lives. Whether you're asking for approval from a bank, needing emergency money, or even pursuing employment, your credit can seriously impact your opportunities. That's why it's essential to understand the importance of having a great credit profile and take the necessary steps to improve it if it is in bad condition. Before we go any further, we must make it clear that Kulture is not a credit expert or advisor, and the information shared in this video is for educational purposes only. The following steps have been proven to work. However, everyone's credit situation is unique, so please receive this with full discretion. With that said, let's get into it. Your credit history and credit score are a reflection of your financial integrity and accountability. They can impact your chances of getting loans to make ends meet, qualify for low favorable interest rates, and even affect your insurance premiums. Bottom line, having bad credit can limit your financial options and make it challenging to reach your goals. But don't worry, there are moves you can make to clean up your credit and improve your financial standing. Throughout this video, we'll explore 12 actionable steps that can help you on your journey towards excellent credit. You might want to take notes, or save this one to your watch later list. It's a sure replay. Remember, these steps are general guidelines and may not apply to every individual's case. Nonetheless, let's run the scale for 12 useful recommendations to enhance your credit score. Number 12. Evaluate your credit status. Obtain a copy of your credit report and be sure all 3 major credit bureaus are included in the report. They are Equifax, TransUnion, and Experian. You can request a copy of your credit report for free once every year at annualcreditreport.com. When you get it, look for any negative factors in the report and mark them as priority repairs. Number 11. Seek professional guidance. Now this action is up to you. You can either research and execute all these steps yourself, or you can hire an expert to see you through the process. If you are not quite confident in your ability to do this alone or don't have the time, consider consulting a financial advisor or credit counselor to get personalized advice and guidance tailored to your specific credit situation. But either way, educate yourself on how to play the credit game. Number 10. Consolidate your debt. If you have scattered debt, meaning money owed on different cards, move all your debt to one card that has a very low or a zero annual percentage rate for at least 1 year. If you don't have a card that offers an introductory 0% APR on purchases, apply for one if you have a decent credit score. Some companies have cards with zero interest for 6 months to 2 years. Once you get the 0% APR card, transfer the balances from all your current cards that are charging you monthly interest on your debt to the card that will not charge you for a certain amount of time. This will allow you to isolate the money you owe and effectively pay the balance down gradually without adding more debt over the upcoming months. There will most likely be a balance transfer fee, but ultimately, those fees will be less than paying high interest every month for a lengthy time. A few banks offer zero balance transfer fees as well. You just have to search for them. The point here is, you want to take the fastest route to paying toward the amount you borrowed and not get caught in a cycle of bare minimum interest-only payments. Number 9. Establish a stronger credit reputation. If you do not have a single credit card, try applying for one. If you are denied, apply for a secured credit card at your bank of choice to get started. A secured account acts almost the same as an unsecured credit card, except it operates more like a checking account. With a secured credit line, you will have to put up your own money to open the account, and then you can spend from the card and pay yourself back on a timely basis. A healthy routine of making payments to yourself will eventually prove to the banks that you can be trusted with a regular unsecured line of credit. Generate solid activity on your secured card for 6 months to a year before asking the bank to upgrade it to one of their unsecured credit cards. Number 8. Limit credit inquiries. Once you get your 0% APR card for your balance transfers or secured credit, stop. Don't apply for anything else. Reason being, You want to minimize the number of times your credit is pulled in a short period for new credit applications, as multiple inquiries can temporarily lower your credit score. Be mindful that credit cards inquiries are also made when you apply for a car or personal loan, a new mortgage or apartment rental, and even some utility companies will pull your credit. Hold off on applying for anything new for a while and watch your score slowly tick upwards. Number 7. Avoid collections and delinquencies. Now that you have taken strides to organize and set up some structure, it's time to knock the debt down. Work to resolve any collections or delinquent accounts, as they can have a significant negative impact on your credit score. You can call a collection agency to negotiate a lower total payoff and inquire about payment options after you've reached an agreement. We heard of different ways to deal with collections, but one sure way of getting them out of your hair is to pay them off and keep it pushing. The less negative marks on your report, the better. Number 6. Build a long credit history. Do not close your oldest lines of credit. If you've had one or more cards open for 5 years or longer and they carry high balances, work towards clearing out that debt, because once you do, the history of those cards and your willingness to pay the balance down will work in your favor tremendously. Your oldest credit account is the most valuable one. Keep it open at all cost. This factor is the anchor when it comes to credit history. Number 5. Pay your credit bill on time. Make sure you make timely payments for all your credit obligations, including loans, credit cards, and utilities. Splitting monthly payments in two can also be a good strategy when trying to increase your overall score. For example, paying the minimum owed each month before its due date, and then making an additional payment in the same month can have a positive reflection on your history. Whether you pay once or twice a month, consistently make on-time payments for a year straight or longer to show your creditworthiness. Number 4. Be patient and have discipline. Okay, so you're stepping in the right direction, and you're making the adjustments needed to accomplish your credit goals. Good for you. Here's where we want to say, spend wisely. Building a great credit score takes time and requires responsible credit habits over an extended period. Don't revert to poor credit usage when you see your score rising. Stay on your path to excellence and you will surely get there in due time. Number 3. Create a diverse credit profile. Having a diverse credit mix means utilizing different types of credit accounts, such as credit cards, installment loans, mortgages, and more. Each type of credit serves a different purpose and carries its own weight in determining your credit score. When you have a well-rounded mix of credit accounts, it demonstrates that you can handle different financial responsibilities and manage various repayment terms. Number 2. Increase your total amount of credit. Now that you have worked hard and diligently to clean and boost your credit health, look to raise your money ceiling. As another credit strategy, you want to elevate your borrowing limit across multiple open accounts. By requesting an increase of credit, you aim to have more available funds at your disposal. With a lower credit utilization ratio, resulting from increased credit limits, your score may see a positive impact. Although it will suffer a quick hit at first when opening a new card, your score will improve drastically after months of encouraged activity. Number 1. Keep credit card balances low. Try your best to refrain from carrying high levels of revolving debt, monthly or yearly. A great practice is to keep your credit card balances well below your credit limits to maintain a low credit utilization ratio. Many say to keep your balance below 30% of your credit limit, but our suggestion is to keep it as close to zero as you can. In fact, pay off balances in full whenever possible. Even if you have a month of heavy spending, be just as aggressive in paying your balance back down under 10% utilization at least. In doing so, your credit score will increase month to month. So there it is, a list of sure-shot methods you can implement to achieve that perfect FICO credit score that you want. Once you get it, be sure to monitor your credit report regularly to identify any errors or discrepancies and fix them promptly if they happen to appear. As promised, here's a bonus tip for you from your new favorite media house, Kulture. We've got you covered. If you can find a way to report your monthly expense payments to the 3 major credit bureaus, definitely do that, to inform them of your frequent positive payment activity. This type of reporting can also help build your credit history and lift your rating. Remember, building an excellent credit score takes time and consistent effort. It's important to exercise responsible credit habits, maintain financial discipline, and watch your credit closely to achieve your desired score goals. You can do it, one day at a time. In exchange for that good game we just dropped, all we ask is that you like this video, share it, and subscribe to our channel. It doesn't cost you a penny. This won't be the last life strategy episode you'll get from us, so make sure you're tapped in. Also, visit our website, kulturescale.com, to stay connected to the latest and the greatest. KS is wishing you the best. Keep hustling and keep growing.